Then there's another one of my strategies, which is called earnings plays, right? This is one of my favorite ones. So there's an earnings report, right? Earnings play, yeah. So essentially, a company would announce their earnings report of their specific their revenue and their quota for that specific quarter, right? And so essentially, what ends up happening is, depending on the market sentiment of what the investors believe that company is supposed to do for that quarter, then the stock would either rise 10% or fall 10%, right? So if you were just to decide to buy a contract or many contracts of a specific company right before they announce their earnings, then your contracts actually go like 1,000% in a day. Like, you would literally make an 1,000% gain in a day.
If you call it right.
If you call it right. If you call it right. However, with options trading, you can only lose the amount you put in. Mm-hmm. This is one of my favorite strategies, because you can actually use, $200, $400, for instance. When Zoom first reported their earnings, right? This was back in 2020. When Zoom did theirs, they had contracts of $400, right? But obviously, because of the pandemic and things like that, Zoom was like a really popping company at the time. Yeah. So all the investors loved Zoom at that point in time, right? So when Zoom came out and reported their earnings, like, they beat it like by a wide margin.
The stock doubled that day.
So you can literally take $400 from that earnings report, right? And literally the next day have about $4,000, $5,000 from that $400 contract.